Market that ECB President Mario Draghi fails to deliver on his promise to do, quote, whatever it takes to save the euro, could see the single currency drop as low as 1.18 against the dollar. That is according to our next guest, who says bearish trends for the euro remain strong and volatility still has the potential to rise. Ron Williams with us, independent market strategist, joining us now. So let's talk about euro dollar first then. False Draghi hope appears to be your conclusion there. Run us through the charts and the way you see it working out.
Yes, I mean, we did see a momentary, temporary bounce from quite price oversold levels, which was in anticipation of what the ECB had previously promised. And of course, as you noted there, it was very much a false hope. And that is now weighing on the market as we see a potential reversion back into that long-term downtrend on Eurodollar. And the key levels to watch on the downside is 120 and as you just noted on the onset, 118.77, which is the 2010 low. On the upside, one thing that might change this view over the next few weeks is potentially move above 124.40. But while that level holds, the downside is still very much in play.
OK, let's talk about the euro against another currency as well. I know you've brought along to share with us the euro against the New Zealand dollar too. Why have you picked this pair in particular?
Well, it's a very interesting technical chart at the moment, but it also works hand in hand with recent comments out of the Reserve Bank of New Zealand, where they alluded to the fact that the New Zealand dollar is quite vulnerable to carry trade capital flows from currencies which are currently undergoing zero rate or close to zero rate interest rate policies, such as the Eurozone. So here, when we look at Euro Kiwi or Euro New Zealand, we can see that it's now pushing to new record lows, not seen in over 10 years. And it's suggesting a potential further breakdown to the downside. There's also a timing cycle that I put in there, a 30-week cycle, which also adds further timeliness to the current move that we're seeing on the downside.
OK, let's leave the currencies to one side and let's talk about the S&P 500. Where do you see this index going next?
Well, it's been pushing higher ever since June, and June very much marked the height of pessimism and sentiment pessimism in the market. And so we've, on a chart basis, been doing quite well, been recovering in recovery mode ever since then, with higher highs and higher lows. Having said that, we are looking like there might be a near-term peak in the S&P 500, but also potentially on the kind of risk-on trade with high-risk appetite rebounding since June. And what we see there on the chart is you see the range that S&P 500 has been within for several weeks, and that there have been 3 failures, 1, 2, and 3, and a potential 4th one coming up over the next few days, which will tell us how these markets will react over the next short term. One thing to keep in mind is there also is a lot of overhead resistance at 1422, the year high, which also ties in with even larger resistance at that point coming in from 2008. What I do see from a cycle perspective is further seasonal weakness into the month of September and October as volatility starts to increase, and we see further deleveraging across these types of trades.
Just a final chart before we go. Gold, we've spoken to plenty of people who have brought gold up in the context of more QE potentially from well, many central banks really around the world, depending on how the economic fundamentals go. But what do you see from the charts in terms of gold?
Well, there are many macro and technical reasons as to why gold should be making new highs into $2,000 and higher, but it just hasn't happened over the last few months, and that's largely been down to the fact gold has been an overcrowded trade, and a lot of investors and traders had needed to deleverage as it did approach that $2,000 psychological mark. Now we're currently trading below that 200-day moving average. The market has very much been asleep in US dollar terms. But the interesting thing to keep in mind is that if we look at gold in Swiss franc terms, that is actually rising higher for various reasons, partly because of the currency effect as the Swiss franc depreciates in value. But one thing I would say is on gold in US dollar terms is keep an eye on 1522. If that were to break on a sustained basis, then it would suggest a short-term correction down to 1470 and 1300. and still my call is for October onwards for there to be a potential buying opportunity on gold for the long-term trend to resume higher.
OK, we'll watch out for that then, Ron. Thanks very much for coming to speak to us today. Ron William, Independent Market Strategist.